Talk to me a little bit about not so much why you needed a cybersecurity company, but why specifically Armis?
Yeah, quite a few things, Romain. So I think if you look at with AI adoption and the volume of devices out there, the AI agents which customers have to deal with, and medical devices, IoT devices, the volume keeps on going up. Customers are finding it very difficult to do security around them and making sure there are no kind of breaches they have to deal with. And Armis is the #1 vendor in that space. They are rated the top, and they have a huge amount of adoption across all the Fortune 500 companies out there. We've been working very closely with them and partnering with them in terms of building out a full security platform. And the joint customers have found our capabilities together very valuable. So when we saw this opportunity and seeing the way that AI adoption is going, this is a great opportunity for us to continue expanding in our security space. So today, our security business has crossed $1 billion at ServiceNow. And addition of Armis will allow us to now get into more new capabilities which customers are demanding from us, as well as allow us to really be differentiated as we add AI, data, workflow, with all of it being around security and making sure there are no breaches customers have to deal with. So that's really the thinking. And Armis is a very innovative company, very well regarded, great team, very good domain expertise. And the combination of us and them can really change the game in the cybersecurity space and build the cybersecurity automation capabilities very fast.
It gets to this idea, too. I mean, you mentioned sort of the potential addition to revenue. I think they talked about a $300 million run rate right now that they're sort of dealing with. This isn't obviously just about the additional revenue that you get specifically from Armis. I assume this is also about bringing in new clients and, more importantly, keeping the clients you have there.
Yeah, this is a very strategic play. I mean, we are very confident about our own revenue plans, right? We don't depend on Armis to deliver our 50-plus, rule of 50-plus, right, which is 20+% subscription revenue growth and 30+% in terms of having free cash flow margin. So we've been 50-plus for the last 10 years, and we keep on delivering that. And we're not dependent on Armis to deliver on what we have been sharing with the street. So this is much more of a strategic play. They are $340 million in revenue already, growing at 50%. But the key thing is the technology and the IP we're bringing in together with ServiceNow capabilities, as well as a lot of the joint customers we can go together with and really provide them a full capability around cybersecurity and help them with all the issues they're dealing with from one platform perspective, right? They have Armis has a lot of data around all the assets company has, the physical assets. If you look at now, physical AI is coming into play as well, robotics and other things like that. That information combined with our ServiceNow's configuration management database, which has access around software and hardware, we can really give you a full security posture management and really give you the exposure, a guarantee that nothing can go wrong.
And I want to talk about your deal-making posture overall, because we're talking about Armis today, but you rewind the clock to March, you struck an agreement to buy MoveWorks for about $2.85 billion. Should we expect to see more M&A from ServiceNow in 2026?
No, I think we have all the assets we require. I think this is an opportunity for ServiceNow to really get into spaces where customers are asking us to get quicker. So roadmap acceleration plus scaled capabilities we require. But I think we are very confident with all the things we have announced so far as the core things we require from our portfolio perspective and acceleration we need to do. We always can continue doing what we've been doing before around tuck-ins and small IP purchases. But from the security perspective, I think we have what we need to become the premium security platform provider in the market today.
And taking a look at some of the sell-side reaction to this deal, both Evercore and our analysts over at Bloomberg Intelligence raised some questions about your organic growth. And I'm wondering, is it feasible for ServiceNow to get back to that, more than 20% organic growth figure?
Yeah, no, Katie, I think that the way we have seen it, and we have been very clear that we are not dependent on Armis, and we will continue delivering the growth we've been delivering for many years. So that one we are very confident about. The foundation is very, very solid. We have to take the foundation and really can continue accelerating beyond what we already do. So our core capabilities around IT and CISO, which is really where a lot of our customers really go to ServiceNow for, we want to make sure that we provide them full capabilities end to end. And deals like Armis allows us to accelerate that. But our core foundation is very strong. We're not dependent on Armis for our revenue plans. And it's very small in terms of revenue perspective from what we're getting from Armis versus what our growth plans are already. And we are very confident of delivering what we have been sharing with the street so far.
Is there an agreement in place right now, Amit, to retain the majority of Armis's employees?
Oh, 100%. So the whole team, we expect to join ServiceNow. Their co-founders, Yevgeny and Nadir, who are very well known in the security space, will join the team at ServiceNow as well. And a lot of everybody else is expected to join as part of ServiceNow. So our goal is to really combine the efforts and really accelerate the opportunity and build a multi-billion-dollar cloud security and overall cybersecurity business for ServiceNow.
Before I let you go, Amit, I'm just curious about where organic growth comes from, if at all, over the years. Obviously, ServiceNow historically has done a great job at these tuck-in acquisitions. Is there an organic growth strategy?
Yeah, so I think if you look at all the growth we've been having, and none of that, the Movers acquisition just closed recently. Armis will close mid next year, and a lot of the tuck-ins are just IP purchases. So everything we've been doing has been organically driven. The 20% plus growth we announced last quarter was organic, and we expect to deliver the organic growth we have been promising the street. And so far, the last 10 years, if you look at it, 50 plus, rule of 50 plus continues to be intact. And we are very confident that that will be hit continually going forward organically.